how to buy your first stock introduction and challenge everyone. Today I'm going to teach you something that could literally change your life. When you hear investing is only for the wealthy, what comes to mind? Most people think, I need a lot of capital to make money in the stock market. That's completely false. Let me tell you something, in 2025, you can step into the stock market with just $10. But first, let me ask you something. How much does your Starbucks coffee cost? $5? Well, with twice that amount, you can become a partial owner of giants like Amazon, Apple, or Microsoft. How is this possible? I'll explain everything today. This video isn't just theory. I'll show you step by step how to start as a complete beginner with real-world examples, what mistakes you must avoid, and how you can build your first portfolio within a month. Real wealth starts with patience, and today I'll teach you the first steps of this journey. Why you should invest now, friends. Let me share a crucial reality with you. Inflation is eroding the value of our money every single day. What you can buy with $100 today will cost you $110 to $115 next year. And what's your money doing sitting in the bank? Just losing value. This is why Warren Buffett says, time is the investor's best friend. The earlier you start, the more compound interest works in your favor. Here's a simple example. Someone who starts investing $50 monthly at age 18 versus someone who starts at 35. Assuming 7% annual returns, by age 65, the first person accumulates $1.3 million while the second only $610,000. Where does this difference come from? Time. Starting 17 years earlier means more than double the money at the end. Why is 2025 especially important? Tech companies are experiencing an AI revolution. Clean energy sector is rapidly growing, and digital transformation is affecting every industry. Now is the perfect time to join this trend. Step 1. Choosing the right platform and opening an account. Now let's get to the practical part. Our first step is choosing the right platform. There are dozens of options in the market, but I'll tell you about the most reliable ones that are ideal for beginners. Robinhood, the most popular starter app. Commission-free trading, very simple interface, but note, you can only buy US stocks. eToro, social investment platform. You can copy successful investors. Accessible from many countries, crypto available to Webull for those who want more detailed. Charts, might seem complex at first, but it's very powerful tools. M1 Finance, perfect for those wanting automatic investing. You set up your portfolio once, and the system automatically rebalances. During the account opening process, you'll encounter terms like KYC, know your customer procedure. This is simply identity verification. Don't worry, it's easier than opening a bank account. You'll need to link your bank account. This process can take 1 to 2 days. Be patient. It's necessary for security. Minimum funding amount is usually between $1 to $10, so you can start with the price of a hamburger. Important note, definitely choose licensed and reliable platforms. Prefer platforms with SIPC protection. This ensures your money's safety. Step 2. Choosing the right stock. Detailed analysis. So, which stock should we buy? Here's the golden rule. Think about brands you use in your daily life. This is Peter Lynch's famous invest in what you know philosophy. Look around you. Do you have an Apple phone? Netflix subscription? Do you constantly order from Amazon? Do you drink coffee at Starbucks? That's your starting point, but don't buy just because you recognize it. Critical indicators to evaluate when assessing a stock. 1. Financial health checklist. P/E ratio shows how expensive the company is. 15 to 25 range is generally considered reasonable. Debt equity ratio, company's debt burden. Under 50% is considered safe. ROE, return on equity. Above 15% is very good. Revenue growth. Revenue growth over the last 5 years. We're looking for consistent growth too. Competitive advantage analysis. This is what Warren Buffett calls an economic moat. What sets the company apart from competitors? Apple, ecosystem power, and brand loyalty. Amazon, logistics network, and Oz Cloud. Coca-Cola, brand power and distribution network. 3. Sector trends. Which sectors are growing? 2025 standouts: artificial intelligence and technology, clean energy, and sustainability, health technology, cybersecurity. 4. Risk assessment. Every stock has risks. Regulatory risks, especially tech companies. Macroeconomic risks, interest rates, inflation, company-specific risk management changes, product issues. Practical example: Apple APL analysis. P approximately 28, a bit high but normal for tech. iPhone sales stable, services revenue growing rapidly. $1 trillion cash reserve. Risk, China market, and regulation. Step 3. Making the purchase. All details. Know it's time to buy. This section is critical because this is where you can lose real money. Order types. Detailed explanation. Market order. Buy at current price immediately. Advantage. Executes immediately. Disadvantage. Price fluctuation. Risk when to use for large liquid stocks like Apple, Microsoft. Limit order. Buy when it reaches this price. Advantage. Price control. Disadvantage. May not execute when to use. For volatile stocks and smaller company, a stop loss order. Sell when it drops to this price. Foundation of risk management, usually set at 15 to 20% loss level. Fractional shares. Game-changing feature. Previously, buying one Tesla share required $800. Now you can buy 0.01 to 5 shares with $10. How does this work? The platform combines your money with other investors to buy full shares and gives you your proportional share. Dividends and price increases are reflected proportionally to you. Trading hours, market hours, 9:30 to 16 o'clock EST New York time pre-market, 4 o'clock to 9:30 estate after hours, 16 o'clock to 20 o'clock EST recommendation. For beginners, trade during market hours practical steps. Search for the stock, use ticker symbol APL, MSFT, AMZN, choose amount dollar-based or shares, determine order type, review, and confirm after execution. N. You'll see it in your portfolio. Step 4. Investment psychology, most important section, friends list. Enter this section very carefully because this is where the biggest reason for losing money lies. Investing is 90% psychology, 10% technical knowledge. Investor behavioral mistakes. 1. FOMO, fear of missing out. A stock has risen 50%. You think I'm too late. I must buy now. Wrong. Real story. GameStop case. Rose to $400 in 2021. Those who bought with FOMO lost 80%. Solution. Systematic investment plan. Follow the plan, not emotions. 2. Catching the falling knife illusion. Facebook was $100, now $80. This must be the bottom. No, don't catch a falling knife. Reality. Those who called Netflix a bottom at $700 saw the real bottom at $100. Solution. Learn technical analysis, no support resistance levels. 3. Impatience trap. Why haven't I made money in 1 month? The market isn't a timing game, it's a time game. Statistic. 75% of those who wait 1 year in S&P 500 win. 95% of those who wait 10 years for. Confirmation bias. Only reading news that supports your own opinion. Very dangerous. Solution. Read both. Bull and bear views. Correct investor mindset. DCA dollar cost averaging strategy. Instead of investing $100 monthly, invest $25 weekly. Why? You buy fewer shares when high, more when low. You turn volatility in your favor. Emotions are eliminated. Real example. $50 monthly DCA for Apple stock. January. $150 gives 0.33 shares. February. $100 gives 0.50 shares. March. $125 gives 0.40 shares. Average cost. $125. Stable despite market price fluctuations. Diversification rule. You've heard don't put all your eggs in one basket. But how? Sector diversification. Tech plus healthcare plus consumer goods. Geographic diversification. US plus Europe plus emerging markets. Market cap diversification. Large cap plus mid cap plus small cap. Asset class diversification. Stocks plus bonds plus rights plus commodities. Bonus. Portfolio strategies and examples. Now let me give you portfolio examples for different budgets. $100. Starter portfolio conservative. Apple APL, $30. Tech leader. Reliable cash flow. Coca-Cola Co. $25. Dividend aristocrat. Increasing dividends for 60 plus years. Microsoft MSFT, $25. Cloud. Plus AI Megatrend S&P 500 ETF SPY, $20. Instant diversification into 500 companies. $500 mid-level portfolio. Balance growth. Technology, 40% Apple, Microsoft, Google. Amazon Healthcare, 20% Johnson & Johnson. Pfizer Financial, 15% Morgan. Berkshire Hathaway Consumer Defensive, 15% Coca-Cola. Procter & Gamble ETF Index, 10% VTI. VXUS $1,000 aggressive growth portfolio. Growth focused. High growth tech, 50% Tesla. Nvidia, AMD. CRM emerging sectors, 25% clean energy. Robotics ETFs international growth, 15% VXUS. VWO speculation, 10% individual picks. Crypto stock sector rotation strategy. Change sector weights according to economic cycles. Early cycle, technology, consumer discretionary. Mid-cycle, industrials, materials. Late cycle, energy. Financials, recession, consumer staples, utilities. Healthcare, risk management techniques. Position sizing rule. No single stock should exceed 5% of portfolio sector weight. Shouldn't exceed 25%. Speculative investments, maximum 10% rebalancing strategy. Review portfolio every 3 months. Make corrections if there's 5% plus deviation from target weight. Partially sell winners and buy from losers. Based decisions on math, not emotions. Closing an action plan. That you have it, everyone. Today you didn't just learn about investing. You saw how to apply it. But knowledge without action is dangerous. Action without knowledge is worthless. Your first week action plan. Day 1 to 2. Platform selection and account opening. Day 3 to 4. Transfer first $50 and learn the interface. Day 5 to 6. Research 3 different stocks. Day 7. Make your first $10 investment. Your first month goals. Regular investment of $25 to $50 weekly. Take positions in 3 to 4 different stocks. Start following daily market news. Begin keeping an investment journal. Your long-term vision. Remember, every great fortune starts with small steps. Bill Gates started programming at 13. Warren Buffett bought his first stock at 11. You can start today too. 5 years from now, you might remember today as the turning point of your life, or you might regret thinking, I wish I had started back then. The choice is yours. My final advice: be patient. The market is a marathon, not a sprint. Keep learning. Financial literacy journey never ends. Stay disciplined. Follow the plan, not emotions. Start modest. Don't invest more than you can afford. To risk ***, important legal disclaimer and notes. Disclaimer: this content is for educational purposes only and should not be construed as financial advice. Past performance does not guarantee future results. Always do your own research and consider consulting a qualified financial advisor before making investment decisions.